This is Eric Muathe from Muathe.com. We'll take a look at two markets, two different time frames. Here's a monthly chart for stock trading in the US, and then we'll compare that in a sense to the Nifty, and this time on a 2-hourly. So different market, different time frames, but you'll see some consistencies. In other words, there seems to be some universal rules as to how the RSI corresponds to certain levels. Now, what I'm going to do is draw a couple of lines, and I'm going to use the RSI in this illustration. So let's begin with the monthly chart for this US stock. I'm going to draw a line connecting RSI highs. Notice where the RSI is trading currently. All right, so that's an area the market might have to make a decision. I'm going to draw another line connecting previous lows here from 2002, connecting to the lows of 2009, something like that. Notice how it corresponds with other lows. These lows here, that low, that low, that low, that low, and there's a low right there. And then we get a break below that line. So the line was well established. And again, notice how it turned into resistance here. But there's a break here. That RSI break corresponds with prices coming off those highs there. And of course, we can draw a uniformity line, something as such. And you can see all of this is showing that currently there's going to have to be a decision that the stock is going to make. Either we get resistance on the line and we start drifting lower on a monthly time frame, or we move above those three lines and we get a chance to explode to the upside. Now, this is a long-term monthly chart for US trading stock. Let's take a look at a 2-hourly chart to see how these things play out on all time frames. Here's just an illustration. If we take the RSI highs, draw a straight line on the 2-hourly for the Nifty, notice as of the last recorded data, it is showing some respect of that RSI topside resistance line. And if we take a look at where it broke down recently, which is this area here, the market did respond with this reversal lower after that break. Take that information, draw our uniformity resistance line, something as such. And notice how the market's been coming to that line and struggling as far as the RSI is concerned. Prices being rejected again, and you can see the market is aware of that level. So again, we can see even on a small time frame, different market, that this is showing that the market is aware of this level. So we either get at some point a breakout and the market moves higher, or we see confirmation of resistance and we drift lower. And what we learn from this is, irrespective of the time frames, irrespective of the market you're trading in, this technical analysis rules apply on different time frames, different markets across the board. So it does make sense to understand some of these simple line principles. Eric Muathe, Muathe.com. As always, good luck, peace, and blessings. ESCS.